Johnson & Johnson, stock ticker J&J, is currently trading at $165.44 per share, and over the past year, it's down about 9.21%. But if you look at the past month, we can see they actually hit their 52-week low just a couple of weeks ago, as you can see around right here. But since then, it's bounced all the way back up to 165. So what was the cause for this huge sell-off that we see right here? And I think there's a couple of different reasons. First off, not quite as important, but we can see Johnson & Johnson will be spinning off its consumer health segment into a separate public company at the end of the year. But the other reason is much more important, and that's the pending lawsuits that have been putting downward pressure on the stock. And we've seen with 3M just how detrimental this could potentially be to your company. 3M, before their lawsuits, was trading around $200 per share. The lawsuits has pushed them all the way down to around $100 per share. So with all of that bad news, why did the stock jump back all the way up to $165 per share just within the past week? And it's actually because Johnson & Johnson released a plan that included over $8.9 billion for the lawsuit. Now, I know what you're thinking, $8.9 billion, why would the stock go up when they have a plan for an $8.9 billion settlement? When you have to remember, this is a company that is massive. They have a market cap of over $430 billion. And when you look at their free cash flow, you can see last year it was over $20 billion. So this is a very large company with large free cash flow and growing free cash flow, which I do think will make it sustainable and they'll be able to pay this off. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Johnson & Johnson. We'll be looking at a few different valuations such as Graham's valuation, the discounted cash flow model, multiples valuation, and a dividend discount model. Like always, if you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. Seeking Alpha is still running their 58% off sale at my link in the description as well, so if you're interested in that, be sure to check it out. But let's go ahead and come up here, and like always, depending on what stock ticker you plug in right here, you can see all of this data is going to go ahead and load in. So if I plug in J&J, all that data will load in. If we come over here, we can see they have a dividend payout of $4.52 per share, dividend yield of around 2.73%. Now, this was much closer to 3% before the recent spike up, so that was a pretty good opportunity right there. If we come down here, we can see analysts currently have a target price of around $179 per share, institutional ownership close to 71%, and a beta of just 0.53. So you will see very, very low volatility from this company, which is pretty good news for a lot of investors, especially if you're just looking for stable income without a whole lot of price fluctuations. But let's go ahead and jump into our first valuation model, and that's going to be Graham's valuation. And here's the formula Benjamin Graham lays out for us to calculate intrinsic value. So the first thing we need is our earnings per share, which we have plugged in right here. We then need our growth rate projection. I'm staying pretty close to in line with analyst projections of about 5. We then multiply that by 4.4, which is the average yield of AAA corporate bonds, and divide by Y, which is the current yield on AAA corporate bonds. And this has actually come down quite a bit over the last couple of weeks. It was sitting closer to 4.8, but now it's 4.27, which will help this valuation out quite a bit. But when we plug all of that in, we still just come to an intrinsic value of $130 per share. Now let's go ahead and move forward and look at our discounted cash flow analysis. And like I just mentioned, this company produces major free cash flow, and it is expected to continue to grow. So with that being said, I'm projecting a growth rate of about 5.5% for the future free cash flows of this company, pretty close to in line with the average growth rate over the past few years has been. I also applied that growth rate to the terminal value, which is the sum of the future free cash flows past the year 2030. I then took the present value of those future free cash flows and added them together, added the company's cash and cash equivalents, and subtracted out their total debt to get their equity value. Once you have the equity value, you divide by shares outstanding, and I came to a discounted cash flow price per share of $170.38. Now, the next valuation we will look at is the multiples valuation. Basically, what we're doing is we're seeing how the market is valuing companies that are similar in structure to Johnson & Johnson using a price to earnings multiple. So you can see the comparable companies right here. We take their stock price and divide by the earnings per share to get their price to earnings multiple. After we get the average price to earnings multiple, we multiply that by Johnson & Johnson's earnings per share, and we come to an intrinsic value of $206.40. Now, the last valuation we will look at is the dividend discount model. Basically, what it does is it values a company based on how much they pay out in dividends and how much that dividend is increasing. So I plugged in the quarterly dividends right here so we can see how much they pay out each year. And this allows us to see year-over-year dividend growth rates. And it's been pretty consistent, 5.5, 6.3, 5%, and 6.6. So that's an average growth rate over that time period of 5.86. Moving forward, I think it'll be somewhere between 5.25 and 5.5, so I'm going with a growth rate in between that of 5.35%, after a discount rate of 8%, we come to a dividend discount model price per share of close to $180 per share. So let's go ahead and jump over to our output tab. And typically we have our 4 valuations listed right here, but because this company typically trades at a premium, it's a dividend king, I really think there's only 2 fair valuations in this scenario: the discounted cash flow analysis and the dividend discount model. I don't think Graham's valuation provides a fair valuation for these types of companies, and I don't think the multiples always provides the most fair valuation in this scenario as well. So we're just going to stick with these 2, and when we average them together, we come to an intrinsic value of $175.04 per share. Now the current trading price for this company is $165 per share. So let's say we wanted to apply a 10% margin of safety. You could see based upon this, our acceptable buy price is around $157.53 per share. With a 20% margin of safety, our acceptable buy price is $140 per share. So it's not quite in the buy range for either of those margins of safety, but even with a 10% margin of safety, you can see within the past week, there were opportunities where it was trading within that price range. You do have to also keep in mind for companies like Johnson & Johnson or Coca-Cola, even Microsoft and Apple, again, those are companies that are typically going to trade at a premium. So it's very, very rare, if ever, that you can buy those types of companies with a 20 or even 30% margin of safety. So if you are interested in those companies, I'd recommend lowering your margin of safety slightly, maybe a 10% margin of safety. If you're a little more conservative, maybe go ahead and stick with 20, but I think buying in at this price for Johnson & Johnson is not a bad addition at all. So it's definitely on my watch list. I added a few shares a couple of weeks ago, and if it dips back down lower to that $150 price range, I definitely look at adding more. So there you go. There's an analysis on Johnson & Johnson. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. Also, be sure to check out Seeking Alpha at my link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.